Good evening, students. Welcome to the live learning classes organized by Board of Studies ICAI. Today evening, we are going to discuss on this topic called tax invoice, debit note, credit note, and e-way bill under GST law. And first and foremost, happy Diwali to one and all listening to me online. And today you have to bear with me if there are any crack and noise here and there in between our session. To the extent possible, I have ensured that I'm in a lock-in key position of my room because Diwali is all around the corner. If there are any sounds here and there, you have to bear with me for today's session. And before we formally begin with our session, I wanted to have a confirmation from some of you. Hope you're able to hear me, and also my presentation is visible. The screen is visible properly. Good evening, Viraj. Hope I'm audible, everyone. Yeah, thanks for the confirmation, Shailesh, Abdul Rahim, and Viraj. Let's start with our today's discussion. As usual, today's session, I'll ensure that you learn the provisions of Section 31, which deals with your tax invoice. And I'll make you go through all CGST rules covered in the Chapter 6, which are connected with tax invoice, debit note, credit note, delivery challan, refund voucher, receipt voucher, right? And also, I'll explain you in detail provisions of Section 34, which deals with your debit note and credit note under GST law. And one important issue, E-invoice under GST. I'll make you to understand the provisions of E-invoice. What is it we need to learn from E-invoice provisions? Again, e-way bill provisions, I think we will not be required money sufficient with 3 hours to discuss entire e-way bill provisions read with above aspects. I'll try to touch upon e-way bill aspects. In the next coming session, we will wind up e-way bill provisions read with your books of accounts under GST law. Before we start with, I'll have a quick recap of what we have learned under registration and in the previous session. Students, please open your institute material. Open your institute material, come to page number 8.81. I will spend some good enough time to quickly recap what all aspects we have learned under registration, and I solve couple of problems from this particular chapter called registration. Let me just add few slides for our problem solving. Okay. Come to page number 8.1. Now, persons liable to register. In this, we have studied that those are the people who have exceeded the threshold limit and also make supply of taxable goods supposed to register under GST law. I repeat, those who exceed threshold limit. Threshold limit has been discussed in the below table. For the purpose of annual turnover, we take into consideration taxable turnover, exempt supply, exports, persons having same PAN, that is your stock transfer or cross charge. Stock transfer or cross charge. These 4 elements are considered under Section 22 to examine your threshold limit under GST law. And in addition to this particular aggregate turnover, we have studied under Section 22 instances where we are liable to register. First aspect is with respect to transfer. That is on account of succession or business transfer. The person who is considered as transferee shall be liable to be registered from the date of succession of business. What are the conditions for that? Transferor should have been registered under GST law. I gave an example where a father who happens to be a proprietor, he transferred his business to his son or daughter. Now, if father is registered under GST, the day when the business is transferred to the daughter or son, from that day they are liable to be registered. This is a case of transfer of business as a going concern basis. Similarly, we have cases of amalgamation, demerger, etc., where the transferor, by virtue of a court order, gets amalgamated or gets demerged. From the date of order, the transferee has to mandatorily register under GST law. So these are two exceptions with respect to turnover limit. Starting under section 22, they'll ask you to calculate aggregate turnover. After aggregate turnover, you will examine state-wise. Like we have special category states, other states. Special category states, we have Meghalaya, Manipur, Nagaland, Tripura. Other than these special category states, 20 lakhs is a threshold limit. Now, this aspect has been covered up here. Article 279A, which talks about your special category states, where Manipur, Mizoram, Nagaland, Tripura, only these states enjoy the annual threshold limit of 10 lakhs. That means to say, if you start your business in any of these states, if your taxable turnover, if your annual turnover, I repeat once again, if your annual turnover is exceeding rupees 10 lakhs, then you are supposed to register under GST. States with threshold limit of 20 lakhs for supply of goods and services. Now here, Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry and Telangana. Puducherry and Telangana are not special category states as per Article 279A. However, along with other like Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, I gave a shortcut to remember AMSU. These four are special category states. In addition to these special category states, Puducherry, Pondicherry, and Telangana. These two states, irrespective of goods and services, they say 20 lakhs is a threshold limit for registration. Now, any other states, that is Jammu and Kashmir, Assam, Himachal Pradesh, where if you are supplying goods alone, up to 40 lakhs, you need not register. If you are supplying both goods and services, then up to 20 lakhs, you need not register. Examination students, please keep in mind, there will be 2 marks MCQ, wherein questions may be set from either of these two particular elements. Wherein 40 lakhs for goods alone. 40 lakh for goods alone. Exception to this, Jammu and Kashmir, Assam, Himachal Pradesh. These 3 states, Jammu and Kashmir, Assam, Himachal Pradesh, though they are special category states, they have given a free hand for exempting a person not to register up to a turnover of 40 lakhs under GST law. Now, this is what we need to remember with respect to 20 lakhs, with respect to 40 lakhs. I repeat once again, wait and watch for 2 marks MCQ question from this particular diagram. Remember, the free hand means the business is given a free hand in the states of Jammu and Kashmir, Assam, and Himachal Pradesh. These 3 states, they say that person who is supplying only goods up to 40 lakhs need not register under GST law. Only goods up to 40 lakhs. So what happens if they supply both goods and services? 40 gets revised to 20 lakhs. Why is that? If you read section 22, section 22 has basically 2 limits. One is 10 lakhs, another is 20 lakhs. 10 lakhs is for special category states, MMNT. Manipur, Mizoram, Nagaland, Tripura. And other than these 4 special category states, 20 lakhs is a threshold limit. Now, when you talk about 20 lakhs, exception to 20 lakhs is for goods alone, which is covered in this particular diagram. Examination, a simple question. They'll say, Mr. X, an individual proprietor, is into activity of supplying pre-packaged goods which are taxable at the rate of 12%. His total turnover in financial year 22-23 is rupees 38 lakhs. Mr. X is from the state of Himachal Pradesh. Examine whether he need to register under GST. Now, what you will say? Only a supplier only is into supply of goods. He has a maximum limit of 40 lakhs. All other states, including 3 special category states, that is Jammu and Kashmir, Assam, Himachal Pradesh. These 3 states, if you have turnover up to 40 lakhs, need not register. So, assuming if I, as an individual X, am from Himachal Pradesh, I can enjoy registration exemption up to 40 lakhs. Now, there was one explanation given. There was one explanation given where the explanation clearly says that any income by way of interest or discount, this shall be excluded for the purpose of, not excluded, it will not be considered supply of service for particular this category of 40 lakhs. I repeat, when we calculate the turnover of 40 lakhs, any income by way of service which is represented by interest or discount, that may not be taken into consideration for the purpose of giving an exemption benefit. I'll come to my PowerPoint presentation to solve this particular problem. I'll give you an example this way. Say, I'll put nature of income. Standalone, let us examine from, say, Himachal Pradesh point of view, Karnataka point of view, and say, Tripura point of view. I'm giving examples of, say, Mr. X, Mr. Y, Mr. Z. These are 3 individual assessors. Say, nature of income, first activity, taxable supply of goods. Amount, rupees in lakhs. Himachal Pradesh, say this gentleman is having a turnover of 28 lakhs. Karnataka, say 36 lakhs. Tripura, say 8 lakhs. Second activity, interest income. Interest income. Say here, I'll say 2 lakhs. Karnataka, say 3 lakhs. And Tripura, say 1 lakh. Third activity, sale of petrol and diesel. Say for Himachal Pradesh gentleman, 5 lakh. Karnataka gentleman, 20 lakh. And Tripura gentleman, nil. Now, while solving a problem, first and foremost, we will calculate what is aggregate turnover. What is aggregate turnover? For the purpose of aggregate turnover, I take into consideration taxable, exempt supply, exports, and interstate supply having same plan. Interstate supply among same person, among distinct persons having same plan. In case of exempt supply, this includes non-taxable goods and services. Non-taxable goods and services. This is my definition under section 22, read with section 2, clause C. For the purpose of annual turnover, we will take section 2, clause C. So for Mr. X, my total turnover will be 28 lakhs. I'll take into consideration taxable. Interest income exempted, I'll take into consideration. Sale of petrol and diesel, non-leviable to GST, non-taxable. This also I'll take into consideration. In case of Mr. Y, 36 lakhs I'll take, 3 lakhs I'll take, 20 lakhs also I'll take into consideration. In case of Tripura, taxable, exempted, and nil, nothing is there. So here I'll say 35 lakh. Karnataka 39 plus 20, 59 lakh. Tripura 8 plus 1, 9 lakhs. Now here, if you see carefully, for the purpose of 35 lakhs, I'll say easy supplier of goods alone. Supply of goods alone. Sale of goods, yes. Interest income by way of explanation, they say that this will be ignored for not giving benefit of interest income. I repeat, under section 22, when I calculate the supply of goods, they gave an explanation that if any income, this income comprises of exempt income by way of interest or discount, that shall not be disqualifying, for taking the benefit of 40 lakhs. Sale of petrol and diesel, this is goods by per se. By virtue of this, Himachal Pradesh is eligible for 40 lakhs exemption limit. Karnataka, again, is into supply of goods alone. Tripura is again into supply of goods alone. Now, I'll come back to our institute material quickly. Look at your page number 8.82. In case of Himachal Pradesh, the person who is supplying with goods, threshold limit is 40 lakhs for supplier of goods. 40 lakhs for supplier of goods in the case of Himachal Pradesh. In any other case, all other states, the same rule is applicable. So for Karnataka also, this rule is applicable. For Tripura, I'll enjoy the threshold limit of 10 lakhs. This is what we need to understand from our respective states. When I come back to this particular slide, I'll say for Himachal Pradesh, exemption is applicable. Now, in case of Karnataka, since it is exceeding the threshold limit of 40 lakhs, no exemption. And in case of Tripura, since it is well within the limit of 10 lakhs, exemption is available. Exemption is available. This is how we calculate our state-wise turnover, wherein goods alone are calculated on the basis of respective states. Examination, it is very, very important to remember this particular rate chart. My suggestion is no need to buy heart. Only thing, keep in mind this, how 40 lakhs, how 20 lakhs is applicable. Maybe 4-5 visits of this particular slide alone, it will make you to remember how this particular slide, this particular table can be remembered. Jammu and Kashmir encourages, Assam encourages, Himachal Pradesh encourages. These are the 3 special category states which are encouraging business to come into their states. Assam, Jammu and Kashmir, special Article 370. Himachal Pradesh, maybe like you have a pencil, writing pencil. Now, this is how you remember these shortcuts to apply to remember which states encourage, which states does not encourage. Now, this is one particular problem based on your aggregate turnover. I'll come back to the same problem in a different fashion. Now, let us examine the same problem, say for person having multiple states. Assuming I'm a person, I'm presenting in multiple states, how do we calculate this particular problem and how do we solve this particular problem? I'll give this way. Nature of activity. Say the state of, I'll say Tamil Nadu, the state of Kerala, then let's take Manipur, and then total. This is aggregate total. We are talking in case of XYZ Limited. For an entity called XYZ Limited. Let us examine each of these particular states. Amount, rupees in lakhs. Rupees in lakhs. Say first activity, sale of taxable goods subject to RCM in recipient hand, subject to RCM by the recipient. Assuming this is a GTA activity. Tamil Nadu, say 6 lakhs, Kerala 2 lakhs, Manipur no transaction. Second, interest income. Assuming Tamil Nadu is the head office, no interest income in other states, only in the state of Tamil Nadu, 1 lakh is there. Third case, supply of, I have to say, not supply, sale of taxable. I mentioned as GTA, let me change this, supply of taxable services. Supply of taxable services. I will call this as GTA. Third line item, I'll say sale of goods, GST at the rate of 18%. That is, these goods are taxable under GST law. Tamil Nadu, 5 lakhs, Kerala, 2 lakhs, Manipur, 1 lakh. Then, sale of land, 20 lakh, nil. Fifth item, sale of alcohol for human consumption. Sale of alcohol for human consumption. This is subjected to state levy. Alcohol is subjected to state levy. Say Tamil Nadu, 50 lakh. I'll make it, say 15 lakh. Kerala, say 18 lakh. Manipur, nil. And one more last item. XYZ Limited. Agricultural produce. Not there is no agricultural activity. Taxable we have covered, exempted we have covered, taxable again we have covered, sale of land we have covered, alcohol. Okay, I'll put it this way. Services on which tax to be paid on reverse charge mechanism. Say in brackets, I'll say sitting fees. This being a company, there is a sitting fee on which tax needs to be paid on reverse charge mechanism. Say entire expenses I have booked in Tamil Nadu for 35, 40, 46, 47, 2 lakhs. This is my breakup state specific. Now, this is a problem which we need to solve. Now, all of you listening to me, can you calculate the aggregate turnover for the purpose of section 2, clause 6? Aggregate turnover in the state. Can you calculate for Tamil Nadu, Kerala, Manipur? For Tamil Nadu, what would be your aggregate turnover? Rahim says there is a issue with the audio. Let me know if all others are having same or you're able to hear me properly. Rahim, is this audio still a problem? Let me know. Suraj says 47 lakhs. Okay. Tamil Nadu, fine. Thanks for the confirmation. Ramakrishna, Viraj, Rahim, thanks for the confirmation. Quickly, I got only one answer from so far. Suraj alone has given the answer. Please give your answer for Tamil Nadu, Kerala. What would be your aggregate turnover in the state? Individually for Tamil Nadu, individually for Kerala, and for Manipur. Manipur is a straightforward case. Only one answer has come so far. Balaji says 37. Okay. Okay. I'll wait for one more answer. Then we will discuss this one by one. Now, for the purpose of calculating aggregate turnover, sale of taxable services subject to reverse charge by the recipient. This is the goods transport agency service. Now here, I am a service provider who is giving taxable services. What is the service? Goods transport agency. And I'm insisting that my recipient has to pay tax under reverse charge. Question here. Is this exempted or is it taxable? Answer would be it is taxable. So only those services where I am receiving that as a recipient, I should not take into consideration. Here, this case, XYZ Limited is giving those services which are called GTA, where recipient is liable to pay tax under reverse charge. Considering that particular reasoning, 6 lakhs participates in aggregate turnover, 2 lakhs participates in aggregate turnover. Interest income, exempted income participates in my aggregate turnover. Sale of goods, GST at the rate of 18%. Because the rate of GST is 18%, this becomes a taxable goods. It also participates in my aggregate turnover definition computation. Next, sale of land. Sale of land, it is a Schedule 3 transaction. Schedule 3, it is neither supply of goods nor supply of services. By virtue of that, 20 lakhs does not get participated for the purpose of aggregate turnover under Section 2, Clause 6, read with Section 22. Next, sale of alcoholic liquor for human consumption. Please remember, this is a non-taxable GST supply. When you read Section 9, petrol, diesel is a non-taxable GST. When you read Section 2, Clause 47, when you read Section 2, Clause 47, which deals with exempt supply includes non-taxable supply. Since alcoholic liquor is a non-taxable supply, this gets participated for the purpose of aggregate turnover computation. Services on which tax to be paid on reverse charge. Please keep in mind, for the purpose of annual turnover, those services on which I am supposed to pay tax on RCM, I need not take into consideration for the purpose of aggregate turnover. So here, services on which tax to be paid on RCM, I don't take into consideration. According to this, for Tamil Nadu, 6 plus 1, 7, plus 5, 12, 12 plus 15, 27. 27 lakhs happens to be my aggregate turnover. In case of Kerala, 18 plus 2, 20, plus 2, 22. In case of Manipur, 1 lakh. Now, aggregate turnover, 6 plus 2, 8 lakhs. 1 lakh in case of interest income. Sale of goods, 5 plus 2, 7, 7 plus 1, 8. Sale of land, nothing will be coming into consideration. Alcoholic liquor for human consideration, 33 lakhs will be taken into consideration. Sale of services on which tax is to be paid on RCM, this does not form part of my aggregate turnover. By virtue of this, 41, 42 plus 8, 50. 50 lakh happens to be my total aggregate turnover state-wise. For the purpose of Section 22, what I will do, only in case of special category states, 10 lakhs. Other than special category states, 20 lakhs. Because my aggregate turnover is exceeding 20 lakhs, I need to register in the state of Tamil Nadu, in the state of Kerala, in the state of Manipur. This is how we will give answer with respect to a problem where you will be getting 3 marks, 1 mark for this, 1 mark for this, 1 mark for this. Finally, to give you a conclusion based on section 22, 1 mark. Total 4 marks is the weightage of this particular problem from your examination point of view. Hope this is clear, students. Geeta says 23 lakhs for Tamil Nadu. Geeta, it's 27 lakhs, ma. Aggregate turnover 25 for Kerala. Okay. Virat says 25 for Kerala and Manipur 1 lakh. Okay. Kerala is 2 lakhs. Okay. Ramakrishna says 48 lakhs. Okay. Rahim says Tamil Nadu 29 lakhs. Rahim, I think last line item, services on which tax to be paid on RCM, that is sitting fees, I think that you have taken into consideration. Barring that, your answer is correct, Rahim. Siddhartha says 13 lakhs, okay. Kerala 20 lakhs and Manipur 1 lakh. Geeta, for the purpose of Kerala, serial number 1, it is a forward charge from XYZ Limited, reverse charge for the recipient. I'll give clarity once again. Serial number 1, forward charge for XYZ Limited. When you read your serial number 1, supply of taxable services subjected to reverse charge by recipient, that is GTA. I'm saying that this is a forward charge mechanism for XYZ Limited. Hope your answers are matching with this understanding. I was waiting for this question. Very rightly asked. Raimi is asking this question. So Manipur is below 10 lakhs, is registration required? Now please keep in mind, Raimi, for purpose of section 22, let me come to my institute material. Rahim, see here, we are looking at the starting point for registration. Every supplier shall be liable to be registered under this Act in the state or union territory other than special category states from where he makes a taxable supply of goods or services or both if his aggregate turnover in financial exceeds 20 lakhs, provided where person makes taxable supplies of goods or services or both from any of the special category states, he shall be liable if to be registered if his aggregate turnover in a financial year exceeds 10 lakhs. Now, both the cases, Rahim, if you read carefully, they have used a language called aggregate turnover. Aggregate turnover. Now, here, for the purpose of section 22, they are referring to aggregate turnover and not aggregate turnover in the state. Aggregate turnover, I have two choices. I can calculate PAN specific. I can calculate turnover in the state. For the purpose of GST registration, central GST, it is applicable across India, and state GST to the respective states. I calculate PAN specific, and only if I'm in special category states, 10 lakhs I'll check. If I'm other than special category states, I'll check for 20 lakhs. Since my aggregate turnover in this particular given case, my aggregate turnover is exceeding 10 lakhs, I have to register in all the special category states and other states. Hope this is clear, Rahim. When I calculate individually, I'm safe. But aggregate turnover is what I take into consideration to come into a conclusion whether or not I need to register. Since I'm exceeding aggregate turnover of 10 lakhs, I have to register in all the respective states. Hope this is clear, Rahim. Hope this answer is clear for all of you. Great. Now I'll come back. Let me go back to my revision in institute material. My humble suggestion, students, please have your institute material. Each question, each of you, whatever question you are asking, it is very valid. Get your doubts addressed at this point, not to carry forward to your examination. The cost of 1 mark is very, very important in your examination. A student who scores 39 asks in the value of 1 mark. A student who scores 49 asks the value of 1 mark who missed his result by aggregate. Similarly, a student who scores 59 who missed by 1 mark for getting an exemption. Examination, every answer with explanation is very, very valid from that particular point of view. Moving further, compulsory registration. Now, page number 8.82, section 24 deals with your compulsory registration. Section 24 deals with your compulsory registration. Section 24. Persons making interstate supply. Now, when a person is making interstate taxable supply, it is compulsory to register. 10 lakhs or 20 lakhs for services alone, there is an exemption which is given. I repeat, in case of goods, it is compulsory. In case of services, there is an exemption notification. Examination, there is no hard and fast rule. You should remember the notification number. Please understand that services up to 10 lakhs or 20 lakhs, you need not register because there is a exemption notification under section 23. By virtue of notification under 23, if you are a service provider up to 10 lakhs in special category states or 20 lakhs other than special category states, need not register. Then, casual taxable person who does not have a fixed place of business in a state, CTP, compulsory registration. Person receiving supply of supplies on which tax is payable by recipient on RCM basis. Any person on, if you look at your profit and loss account, on the in the profit and loss account, there are expenses on the debit side where by virtue of section 9.3 or by virtue of 9.4, there is a tax which needs to be paid on RCM. So here, irrespective of your aggregate turnover under section 22, I repeat, a person receiving supplies on which tax is payable by a recipient on RCM is mandated to register under section 24, irrespective of your turnover under section 22. I'll give you an example for this particular section 24. Examination, again, one wait and watch question where you will be tested with multiple aspects where 24 and 22 are tested together. I'll give the example this way. Nature of activity. Then let's take example of Mr. X, Mr. Y, and Mr. Let's take only examples of two people. Mr. X and Mr. Y. Mr. X is in the state of, say, Tamil Nadu, and Mr. Y is in the state of, say, Mizoram. And also, I'll give one more example, say Mr. Z, who stays in the case of, say, Assam. Amount, rupees in lakhs. Rupees in lakhs. First, nature of activity. Say, I'll give example of supply of alcoholic liquor, alcohol. Supply of alcohol, 2 lakhs, 5 lakhs, and say another 2 lakhs. Second, income from salary. Income from salary, 20 lakh, 12 lakhs, 24 lakh. Already I've given in lakhs. Let me not use this. 24 lakhs. Then third, let us say receipt of transportation. Receipt of transportation taxable on RCM at the rate of 5%. Taxable. Receipt of transportation service taxable on RCM at the rate of 5%. In case of Tamil Nadu, say 2 lakhs. Mizoram, nothing is there. Assam, nothing is there. Then, let me give another example of, say, very good example. Motor vehicle registration charges. Motor vehicle registration charges paid to state government. So in case of Tamil Nadu, 2 lakhs is paid. In case of Mizoram, 2 lakhs is paid. In case of Assam, 2 lakhs is paid. So this is how we were given with respect to basic information from the books of accounts. Now, first and foremost, our job is aggregate turnover. All three are individual cases. Let us do the computation of aggregate turnover, wherein I will say supply of alcohol participates for aggregate turnover, salary, schedule 3 item, receipt of transportation, taxable on RCM basis. Now, this does not form part of my aggregate turnover. Motor vehicle registration charges does not form part of aggregate turnover. Similarly, in this case, this is forming part of aggregate turnover, salary, schedule 3 transaction, receipt of services on RCM, not applicable. Now here, when I look at aggregate turnover, in case of X, 2 lakhs, in case of Y, it is 5 lakhs, in case of Z, it is 2 lakhs. Now, based on aggregate turnover, we will say that no need to register under GST. But when you look at the next condition, under section 24, if there is any liability to pay RCM, there is a mandatory requirement for registration under GST. Now, if you look at this serial number 3, receipt of transportation services on which tax to be paid at RCM 5%. Now, in this case, because 2 lakhs is a turnover, because there is a 2 lakhs turnover, now what I will do, I'll examine notification 12 of 2017. In notification 12 of 2017, which deals with your exemption, please remember students, there is a entry for services from government, where it says any services by a government to a business entity. Any services by a government to a business entity who is not registered due to threshold limit, that is exempted under GST. Now, in this case, serial number 4, motor vehicle registration. Motor vehicle registration, please remember your entry number 47, serial number 47 in your notification 12 of 2017, where it says clearly, in case of any license which is to be given by a state government or central government or a local authority, it is exempted under GST. By virtue of that, no need to pay GST on this 2 lakhs, no need to pay GST on this 2 lakhs and this particular 2 lakhs. So this particular entire turnover will be exempted from payment of GST. Next GST item is in case of serial number 3. For this particular transport activity, there is no exemption per se, wherein section 24 gets triggered for X to register under GST by virtue of section 24. In case of Y and Z, though there is a reverse charge turnover, because of this exemption notification, that is serial number 47, there is no registration requirement for Mr. Y and Mr. Z. Now, this is a combination of exemption chapter, your registration chapter, for the purpose of examining taxable activity and calculation of turnover for the purpose of registration. Hope this is clear, students. I'm trying to cover 2-3 chapters together to review your understanding on these aspects. There's one question from Siddhartha. If one person is doing business in multiple states, like one state, Maharashtra, his business is supply of liquor and turnover of say 50 lakhs, and in another state, Gujarat, his business is taxable supply of goods, but turnover is only say 4 lakh. Then registration लेना पड़ेगा नहीं लेना पड़ेगा, both states में या सिर्फ एक ही state में. Siddhartha, point number 1, calculate aggregate turnover. When you calculate aggregate turnover, if aggregate turnover is exceeding 20 lakh, registration लेना पड़ेगा. कहाँ पे लेना पड़ेगा? जिस स्टेट में टैक्सेबल एक्टिविटी सप्लाई हो रही है, उसी स्टेट में रजिस्ट्रेशन लेना पड़ेगा. नाउ आपका एग्जांपल में महाराष्ट्र में लिकर का सेल हो रही है, गुजरात में खाली टैक्सेबल एक्टिविटी का सेल हो रही है. महाराष्ट्र में जीएसटी का रजिस्ट्रेशन जरूरत नहीं है, क्योंकि वहां पे टैक्सेबल एक्टिविटी कुछ भी नहीं है. गुजरात में 5 लाख का टैक्सेबल टर्नओवर या 4 लाख का टैक्सेबल टर्नओवर है. इस बिकॉज एग्रीगेट टर्नओवर इज एक्सीडिंग 20 lakhs, आपको गुजरात में यू हैव टू टेक अ रजिस्ट्रेशन इन गुजरात एंड नॉट रिक्वायर्ड इन महाराष्ट्र. Hope this is clear, Siddhartha. Students, sorry, I have been using Hindi just to give a comfort to Siddhartha. Coming back. Quickly, I'll touch upon 23. Persons not liable for GST. Who are the persons not liable for GST? Persons who are engaged exclusively supply of goods or services which are not liable to tax. Agriculturist, prominence income tax and indirect tax. Persons making only reverse charge supply means tax is under covered under 9.3 or 9.4. If I'm a service provider or if I'm a seller, where purview of 9.3 or 9.4, the recipient is liable to pay tax. Supplier is exempted. Then no need to take any registration. This is what we need to understand. In the process, we have discussed that persons making interstate supply of taxable services up to rupees 20 lakhs, no need to register. In case of goods, if there is any interstate supply, in case of goods, interstate supply under section 24, compulsory registration. Compulsory registration. Examination, 1 mark MCQ on the basis of goods and services. Please don't get confused. If you're dealing with services, you enjoy that interstate supply. If you're dealing with goods, even if it is 5 lakhs, you're supposed to get registered if it is an interstate supply. Okay. Now, Siddhartha is asking this question. So, for limit, 20 lakhs, kaise hoga? Siddhartha, that's what I was saying. Huh? I calculate my aggregate turnover. I'll give you a clarity in this fashion. State 1, State 2, State 3. Assuming there are 3 states. 20 lakhs in one state, 18 lakhs in another state, and 12 lakhs is another state. All put together, 38, 40, 50. Now, this is my aggregate turnover. Once I get an aggregate turnover, I examine am I in special category state or other state? Now, in this case, irrespective of whatever be the state, this is exceeding 10 lakhs, this is exceeding given 20 lakhs. By virtue of this, there is a necessity, this is my step one, Siddhartha. Step one, I'll calculate my aggregate turnover. And I examine, if I'm only in special category states, I'll check for 10 lakhs. If I'm in any other states, I'll look for 20 lakhs. Now, in this case, because now I'll give this way. State 1 is in Mizoram. State 2, Tamil Nadu. State 3, Kerala. Now, if I'm only in special category states, 10 lakhs is irrelevant. If I'm in other category, other than special category states, this is irrelevant. So here, since I've exceeded the given threshold limit, I'll now examine state-specific nature of activity. Scenario. Assuming the goods are taxable, goods and services are taxable, goods and services are taxable. In this case, register in all the states. Why? Your aggregate turnover is exceeding 20 lakhs. Your aggregate turnover is exceeding 20 lakhs. Because you're exceeding 20 lakhs and you're rendering taxable and exempt services, register in all the states. Is this clear, Siddhartha? Now, I'll come to scenario number 2. In scenario number 2, so this is my scenario 1. Scenario 2, Mizoram exempted, Tamil Nadu exempted, Kerala taxable. Because I'm exempted in 2 states, I'm taxable in 1 state, I need to obtain registration in the state of Kerala because my aggregate turnover is exceeding 20 lakhs. Because aggregate turnover is exceeding 20 lakhs, there is no, again, second check that up to 20 lakhs, I can enjoy the exemption. There is nothing like that. Because your aggregate turnover is exceeding 20 lakhs, in the state of Kerala, right from the moment you start your taxable activity, register and pay GST. In case of Mizoram and Tamil Nadu, no need to register. Say scenario 3. All the 3 states, I am only into exempted activity. Though my aggregate turnover is exceeding 10 lakhs or 20 lakhs, because there is no taxable activity in any of the respective states, no need to register in any of the states. This is how I apply my principles of section 22 now. This is how I have to do. When you read section 22, it says aggregate turnover. It doesn't say state specific exam. Hope this is clear, students. Let me see any other doubts. Great. Now, let us see if any other provisions under registration. That's all. From there, procedural aspects we have touched on. Now we will come to our today's learning. Tax invoice, debit note, credit note under GST law. These are the provisions which we have to study in today's class. Tax invoice, debit note, credit note. Credit note means a document issued by a registered person. Debit note means a document issued by a registered person under 34. Invoice or tax invoice means the same under section 31. Now, so what is the importance of credit note, debit note? Please keep in mind. Whenever we say credit note, section 34, subsection 1. Debit note, section 34, subsection 3. I'll give you a little clarity before we go further on this particular definition. Seller sells the goods. Then, in scenario 1, he noticed there is a clerical error. There is a clerical error. What is the clerical error? In scenario 1, price is overcharged. Price is overcharged. Seller and buyer. In scenario 1, because of my clerical error, price is overcharged. In this case, my seller will issue a credit note. My buyer will reciprocate by using a debit note. This is a sale related credit note. This is a purchase related debit note. I'm just recapping, I'm refurbishing our accounting aspects, debit note, credit note, what we use in our accounting terminology. If you feel, so these are basic fundamentals, yes, you are right, these are basic fundamentals. But when it comes to the GST audit, when it comes to the audit point of view, GST departmental audit point of view, many a times, we do blunders in understanding this debit note, credit note in terms of disclosure in our GST annual returns. Second, scenario number 2. There's a clerical error where GST rate is short applied. GST rate is short applied. That is, 12% is applied instead of 18%. 12% is applied instead of 18%. So what does the seller will do? He'll issue a debit note to collect the balance money from the customer. Similarly, buyer, he will account a credit note as a purchase. He increases the buyer increases his liability in his books of accounts. He says, I have accounted say on 1 lakh, 12,000 as a GST liability. I am supposed to pay 18,000. Balance 6,000. I am going to increase my liability. This is a point number 1 with respect to debit note, credit note, what we are going to discuss. My suggestion, please make a note in your working notes, this particular slide. I repeat again, you will get yourself confused when I say credit note, debit note with respect to GST, with respect to the price, with respect to adjustments. If this is clear, all our discussions on section 34 is going to be clear. Right? Okay. Now, next aspect, I talk about a credit note or debit note. Credit note or debit note, when we read GST, please keep in mind, we can classify a credit note or debit note into 2 aspects. One is for GST, second is for accounting. So for GST, we say debit note or credit note with GST. In case of for accounting, I say without GST. Without GST, let's call this as a financial credit note. I would say financial, there will not be a financial debit note. We call as a financial credit note. Why I call as a financial credit note? This is only for accounting purpose. That means to say, there's a compliance under section 34. If the compliance under section 34 is not there, then I call a credit note as a financial credit note. This is what we need to understand. Is this clear, students? There's one question from Siddhartha. Sir, interstate में maximum limit 20 लाख रहेगा, अगर स्पेशल कैटेगरी नहीं है तो either goods और services. सही बोला सिद्धार्थ. तो अगर goods, खाली goods के बारे में बोल रहे हैं तो 40 लाख का लिमिट है in third table. In case of goods and services, 20 lakhs is a threshold limit. But आपको ये सेक्शन 22 में एनुअल टर्नओवर बोल के लिखा हुआ है, सॉरी एग्रीगेट टर्नओवर बोल के लिखा हुआ है. वो सेक्शन 22 खाली रेस्पेक्टिव स्टेट के बारे में जिक्र नहीं कर रहा है, वो बोल रहा है एग्रीगेट टर्नओवर. If my aggregate turnover is less than 20 lakhs, I repeat, if my aggregate turnover is less than 20 lakhs, as a service provider, I need not register under GST. I'll repeat this again. Assuming Siddhartha gets qualified as a chartered accountant, future chartered accountant. Very soon, you're going to get qualified as a CA. Year one, probably, I'll just take a hypothetical example. Say in Jan, Feb, March, all 3 months together, Siddhartha, आपका turnover खाली 12 लाख बन रहा है. Up to 20 lakhs, you need not register under GST. By chance, if you as a chartered accountant, you give an interstate supply, Section 24 will come into picture. There is a exemption notification by virtue of which you need not register under GST up to 20 lakhs. Up to 20 lakhs. There's a notification N of 2019. I'll just show you this notification for your reference purpose. Sorry, 10 of 2017. Let me just share one slide. So that this is what you need to remember. This notification, this 10 of 2017. By virtue of this, interstate services, Kali interstate services, 20 lakhs in case of other states, 10 lakhs in case of special category states. आपको क्या करना पड़ेगा? You need not register under GST if your turnover is less than 20 lakhs, if your turnover is less than 10 lakhs in case of a special category states. Assuming for a moment Siddhartha is from Tripura. Siddhartha is from Tripura. And Siddhartha gives a service of a stock audit to a particular, say, Jammu and Kashmir bank. Jammu and Kashmir bank, which is there in, say, Jammu. Now, this becomes an interstate supply. By virtue of interstate supply, Section 24 क्या बोल रहा है? Compulsory registration. But Section 23 के अंदर वो बोल रहा है, if you are making any interstate taxable services, then up to 20 lakh or 10 lakh, no need to register. Please keep in mind, this is applicable only for services. In case if it is for goods, then you don't get a benefit of this notification under Section 24. Because of interstate supply, you need to compulsory register. This is what we need to understand. Siddhartha, hope I clarified your doubt, ma? Ramakrishnan is asking this question. For automobile industry, if quarterly volume discount is issued at the end of quarter, for the total sales at the rate of 2% of the quarterly sales, vendor issues it as a credit note, should he charge GST on that, or is it only a financial credit note? This is for sales done in a quarter and not a clerical error, not any price adjustment. Ramakrishnan, I'll definitely answer your question, ma. When I start with Section 34, wait for, say, 1.5 hours from now, I'll give you a clarity with respect to Section 34. I'll definitely clarify your doubt, Ramakrishna. Let's come back to, let me just clear this. In case of goods, we have discussed, let me just erase this. In case of removal, there is a definition called Section 2, Clause 96. When we read the time of supply, I elaborated in detail this aspect of removal where there is a dispatch, removal where there is a collection. This is in case of FOB sales. This is in case of FOR sales. Or I can also call this as X works. At my factory gate, I made the goods available. Till the factory, I'll put it this way. FOR, dispatch, collection is my X works. Where the transfer happened, the factory gate, collection. Where till the factory gate of customer, I would call this as a dispatch. What we need to understand, removal is both for the purpose of section 31. Now, section 31, which deals with issuance of a tax invoice. It says, in relation to goods, a person who is registered under GST, who supplies taxable goods, has to issue a tax invoice. When? Before or at the time of removal or delivery of goods or making available thereof. Where supply involves movement of goods, I need to issue a tax invoice. Where supply does not involve movement of goods, then also I have to make a issuance of a tax invoice. Delivery of goods or making available thereof. This is a case where I'll give an example of this example this way. Delivery of goods or making goods available thereof. I'll give example this way. Let us take example of say a premises owned by owner is XYZ Limited. Tenant 1, tenant 2. Tenant 1 is Mr. X or Mr. A. Tenant 2 is say PQR Limited. Mr. A uses this particular premises. In the process of using this premises, he purchases DG set. He purchases office furniture. Now, when tenant 1 is vacating this particular premises, he thinks that removing this office furniture, it is going to be making, it doesn't give any valuation to Mr. Tenant 1. Also, DG set installed in this premises, he feels quite a cost of transportation is going to be costly, wherein tenant 1 transfers this DG set and office furniture to tenant 2. Tenant 1 transfers this particular DG set and furniture to tenant 2. In this case, there is no movement of goods. Rather, this we call as making available goods thereof. So here, please keep in mind, tax invoice needs to be issued before or at the time of removal or delivery of goods or making available thereof. So this term making available thereof comes from this particular example. So tenant 1 is making goods available to tenant 2 when tenant 2 takes the possession of this particular immobile property. By virtue of this particular making availability, a tax invoice needs to be issued before or at the time of making available this particular goods. This is where section 31 says in relation to goods when a tax invoice needs to be issued. Now, for services, registered person who supplies taxable services shall, before or after the provision of service, but within a prescribed period, issue a tax invoice. I can issue a tax invoice before or after. After what? Provision of service. What do you mean by provision of service? Provision of service is nothing but completion of service. When you render services, but within a prescribed time limit, we have to refer to Rule 47 for understanding what is the time limit for the purpose of issuing a tax invoice. Now, please keep in mind, students, your revenue recognition AS9 read with GST. When I read my GST law, section 13 deals with time of supply for services. Read with Rule 47, which deals with your time limit for issuing a tax invoice. Now, this is one reason where my books does not agree with my GST returns. Books does not agree with my GST returns. So, as per GST law, they have given a certain time limit under Rule 47. I'll explain you the time limit, maybe 5 minutes, 15 minutes from now with respect to Rule 47 provisions. For services, government may, on the recommendations of the council, what it says, specify category of services or supplies in respect of which tax invoice shall be issued within such time and such manner as may be prescribed. Now, I'll give one example of one notification, 6 of 2019 central tax rate, wherein this 6 of 2019 deals with your transfer of development rights. Transfer of development rights. In case of a promoter, where provisions of section 148 read with section 31, read with section 13, which deals with your time of supply, where government says this tax invoice can be issued in case of a TDR, on or before obtaining occupancy certificate. So, in case of promoter, this section 148 in notification 6 of 2018, they say a promoter can issue a tax invoice in relation to transfer of development rights when on or before obtaining the occupancy certificate. This is the taxpayer power which is vested with the government to notify certain supplies on which a point in time when a tax invoice will be issued, subject to such conditions mentioned therein. Now this clause B is little important. Subject to such conditions mentioned therein, specify the category of services in respect of which any other document issued in relation to supply shall be deemed to be a tax invoice, or tax invoice may not be issued. Now, so why are we reading this? What is the relevance of this? I see many of you down the line, 3 to 5 years, going to get into the corporate world. You may get into a CFO position of a startup company. 5 to 10 years down the line, you're going to become a director of a financial institution, maybe a banking company, maybe a particular service industry. Please keep in mind, these provisions could be a minute provisions. This is going to help you a lot in setting up your business model, in setting up your ERP system or accounting system. Whatever we are going to discuss today is going to help you from accounting system point of view, from developing the business model point of view. So here, I'll give an example of a bank. I give example of a multiplex theater. In case of a bank, they don't issue a tax invoice. Any other document issued in relation to supply will be deemed to be a tax invoice. Why banks have this luxury? Day-to-day basis, a number of transactions are voluminous in nature, where issuance of a document called tax invoice is not feasible. Issuance of a document called tax invoice may not be possible considering the plethora of transactions. Another example, in case of a multiplex theater, they sell hundreds of thousands of the tickets in a day. Tax invoice may not be issued for all those transactions put together. This is one example. I'll give one more example. Let's take example of a AMC for battery or UPS. Let's take example, a very small example of Exide or Amaron batteries. The battery which is sold, which is having UPS also for an individual customer. Every month, the seller comes door to door, collects 100 rupees as service fee for the inspection of the battery. Also, they check the life of UPS. Now, every day, the engineer visits 15 to 20 houses for AMC. Now, assuming there are 100 engineers in a particular district, there are 1,000 engineers in a state. Now, 1,000 into, say, 20, it becomes 2 lakh. Now, 2 lakh invoices per day is very, very cumbersome. wherein government says tax invoice may not be issued. Now, these are the provisions which are discussed under Section 31. Now, let me see before I start with this, any doubts so far? Namrata says large volume of transactions where tax invoice may not be involved. Perfectly correct, Namrata. Now, when I talk about a tax invoice, this is one aspect from Rule 36. Please keep in mind whenever you do an internal audit, whenever you do audit under GST law, reference to Rule 36 is something which is compulsory, where it says tax invoice should mandatorily consist of 5 elements. Point number 1, GST number of supplier, GST number of recipient. If this is a B2B transaction, Rule 36 says that if it is a B2B transaction, GSTN of a supplier, GST of recipient is compulsory. Point number 2, description of goods, description of services is to be mentioned on a tax invoice. Point number 3, amount of tax charged where IGST, CGST, SGST has to be mentioned. Total value of invoice, that is value of supply, has to be mentioned. In case of an interstate supply, place of supply is compulsory. Now, please keep in mind whenever you do an audit, when you look into a tax invoice, Rule 36 says that these 5 elements are compulsory for availment of input tax credit. So if you have, say, insurance, you buy an insurance policy, say you are in Maharashtra, service provider is in Delhi, service recipient is in Maharashtra. If place of supply is missing, say if POS is missing, then ITC cannot be availed by recipient because Rule 36 compliance has been defaulted. Zero rated supply. In case of a tax invoice, where you are making a zero rated supply, upon payment of IGST, I'll give you a little clarity with respect to this zero rated supply. Just give me a minute. In case of zero rated supply, there is an amendment that happened in 1st October, Section 16 of IGST Act 2017. There is an amendment on 1st October 2023. Examination for May 2024 attempt. Wait and watch again one another provision on Section 16. When I deal with Section 16, I have a reference to zero rated supply. Zero rated supply. That means to say exports where goods or services rendered outside are rendered to recipient outside India. Similarly, SAZ unit or developer. For all grammatical meaning, though goods or services does not leave India, we call goods or services supplied to SAZ unit or developer, or goods and services exports. We call these two as zero rated supply. So what is the purpose of zero rated supply? In case of a zero rated supply, the rate of tax will the rate of tax is zero. The rate of tax is zero. Means you enjoy not to charge GST in case of zero rated supply. This is a basic understanding all we had all along. Now, what is the amendment made from 1st October 2023? In case of SEZ supplies, they have added a term called authorized operations. Authorized operations. Only in case of goods or services which are rendered for authorized operations, I enjoy benefit of zero rated supply. I enjoy benefit of zero rated supply. What do you mean by this authorized operations? Generally, there is a SEZ officer and there is something called approval for procurement. Approval for procurement. Now, this is my stage 1. At stage 1, the respective SEZ unit or developer, SEZ developer or unit, they make an application. They make a application to SEZ officer where this approval will be given. Where they'll say, sir, I import so-and-so goods, I import so-and-so services from domestic tariff area. Let's take example of, say, a software company. A software company requires, say, system, laptop, housekeeping manpower, financial services from a bank, say auditor support service for their audit function. Now, assuming these are the basic functions they need, what they will do, the SEZ unit or developer, they'll say, they give the name, they give the address, they give the GST number, they give the description, that is HSN/SAC of the goods or services to be procured from this particular supplier of goods or services. So this particular committee who give an approval certificate, they mention these are the suppliers or these are the services which can be procured by a SEZ for their authorized operations. They give a blanket approval. Once the approval is received on actual basis, on actual user condition basis, when the goods or services received by the SEZ unit, they in step 2, they give this particular list of goods and services to SEZ officer. This SEZ officer approve this particular bills, saying that this invoice is saying that these goods or services, are for authorized operations. Only then we get the benefit of this zero rated supply. So this is one amendment. Actual authorized operations is one terminology added in section 16 of IGST Act. This is one major amendment happened from 1st October 2023. So whoever is doing a internal audit or GST audit for any SEZ client, please keep in mind this going forward. Namrata is asking this question. So what is description of goods or services? Description is generally we say in case of say audit, we mention that statutory audit for so-and-so transaction, or any remittance to be made outside India. We say remittance certificate for so-and-so activity, internal audit for so-and-so activity. We specify in detail what is the description of nature of services which are being done. Financial activity, internet support service, telecommunication service, advertisement service, etc. Hope this is clear, Namrata. Authorized operations. Now, in case of authorized operations, I can export these goods and services upon payment of IGST supplement for exports are supplied to SEZ unit or developer for authorized operations. Now, I'll give this aspect this way. Though we are not dealing with refund, I'll clarify this point now itself. Section 54 deals with refund mechanism. Now, I'll give a simple example to understand this aspect for you. Assuming there is a seller, there is a buyer. Seller, Mrs. XYZ Limited. Buyer, Mrs. ABC Limited. XYZ Limited, they are into manufacturing activity of, say, DG set. Assuming 10 lakhs is the value of DG set and the GST applicable at the rate of 18%. This is my transaction value. This DG set needs to be supplied to Mrs. ABC Limited, who is a SEZ developer. SEZ developer. Now, to manufacture this DG set, assuming my cost of purchases is 8 lakh. My cost of purchase is 8 lakhs. And on this cost, I pay GST at the rate of 18%. Right? Assuming this comes to rupees 1,44,000. 1,44,000. On 10 lakhs, I'm supposed to collect 1,80,000 GST. This is my input. This is my output. Now, buyer who happens to be a SEZ developer, he says, look, there is a benefit of section 16 of IGST Act. I say this is for authorized operations. This is for authorized operations. Now, when I say this is meant for authorized operations, don't charge GST. Don't charge GST. When they say don't charge GST, this 1,44,000, which sits in my balance sheet as current asset, that always sits in my balance sheet. There is no mechanism where I adjust this input tax credit with output tax. I adjust this input tax with output tax and balance amount I pay through cash ledger. For a moment, assuming SEZ customer says, don't charge GST. So every customer of me is a SEZ customer. So month 1, I sold 10 units. Month 2, I sell 5 units. Month 3, I sell another 10 units. Now, month on month, what you will see, my balance sheet keeps on bulging with respect to my input tax credit, which accumulates in my current asset. Now, this is a mechanism where section 54 says, claim a refund. Claim a refund. Refund of accumulated ITC, or under Rule 89, pay IGST and claim a refund. Now, I have two mechanisms which are given under Rule 54. One, whatever input tax accumulation is there, file a refund application, claim a refund. Or under Rule 89, I have second mechanism, pay IGST, claim a refund. Now, there are pros and cons. There are advantages, disadvantages. I think Arun Chandrasar is going to cover this particular refund related chapter. I'll stop this discussion at this point in time. So please keep in mind, I have, when I talk about SEZ supply, option one, don't charge GST. Option 2, charge GST. These are the two options I have. So what I will do here, in case of supplies to SEZ, when I pay GST, supplement on the tax invoice, I'll mention that this is meant for SEZ unit or SEZ developer for authorized operations. 1st October 2023, getting a acknowledgement from SAZ officer from SAZ officer is something which is important. I repeat, getting an acknowledgement from SAZ officer on tax invoice for this particular authorized operations is compulsory. This is your option number 1. Option number 2, without payment of IGST under bond or LUD, letter of undertaking. Letter of undertaking is a simple declaration which I make on a GST portal saying that, look, I wanted to give the goods or give the services to SZ unit or developer, which is meant for authorized operations. The GST officer will ask, what is the proof that this is meant for SZ operations? Get a acknowledgement. Get a acknowledgement from SZ approved officer. SZ officer. Once you have this acknowledgement, this is good enough for me to claim a refund, which is meant for authorized operations. Hope this is clear, students. Namrata is asking this question. Rule 89, please tell the logic. Namrata, I'll quickly summarize this. The reason this entire chapter is going to be discussed by Arun Chajja sir. So I'll not poach into that particular chapter. In sum and substance, when I talk about Rule 89 and when I talk about Section 54, there are two mechanisms. Like one, when I talk about accumulated input tax credit, then I have to file a refund application for a particular financial year. That means to say, April 22 till March 23, when I say 22-23, only those bills only those purchases which are made from April 22 March 23 claim a refund for accumulated input tax credit. So what happens in case of other than accumulated input tax credit? Now, in case of other than accumulated input tax credit, there is no necessity for me to correlate purchase of goods or purchase of services with respect to one accounting period. I can claim my refund irrespective of the accounting period when I pay GST. So the simple difference is accumulation ITC, they'll ask, show me your balance sheet. Show me which period you purchased these goods or services. In case of a export of goods or services without payment of GST. In case export with payment of GST, I need not show when is my purchase made. I need not prove is it on input service, capital goods or input services. Also, I need not show for which particular period this ITC is pertaining to. Rule 89, that is export with payment of IGST, supply of services with payment of IGST is a easy route compared to accumulated ITC under Section 54. This is a simple logic why we decide as a business person whether to supply the goods under this route or supply the goods and services under this route. Hope this is clear, Namrata. Hope this is clear, now. I'll see if any other doubts are there. Rahim is asking this question. Sir, is IGST to be paid by the supplier? Yes. In case of exports, IGST has to be paid. Zero rated supply. The seller has to charge IGST. It is not the recipient. Hope this is clear, Rahim. Now, in case of goods, Section 31 says 3 copies are required. In case of services, 2 copies are required. Original, duplicate, triplicate. This comes from an excise era. In fact, excise era, there are 4 manufacturer copy, seller's copy, manufacturer's copy, transporter copy, recipient. Original for SSC, duplicate for transporter, triplicate for recipient. There are different fashion, but these three copies actually came from our central excise area. In case of services, I have to give original and duplicate. So what happens if I issue a tax invoice using a e-invoice? In case of an e-invoice, issue, I need not issue original, duplicate, replicate. One copy is good enough. All these three sets are not required because it is a digitally authorized document. One copy is good enough. Students, we are at 7:35. Let's have a break for 10 minutes. We'll resume back at 7:45. Let me see any questions before we start. Balaji is asking this question. So can I make supply from each state without registering up to 8 lakh? Reading too much of technical provisions, no, reading in between the lines, tax planning leads to tax evasion at times. Too much of fine tuning, too much of knowledge is also dangerous, Balaji. See, assuming 20 states, like every time you get an order, you go to a different state for making a supply. 8 lakhs in this state, I'll go to another state. 8 lakhs again, I'll go to another state. 20 into 8 lakhs, 160 lakhs. 1 crore 60 lakhs, more than your composition scheme. Interstate supply violation, section 24 violation, section 10 violation. Please keep in mind, aggregate turnover is what the section 22 refers to. So once you have crossed the magic figure of 20 lakhs, gone, you are supposed to register. So answer to your question, Balaji, refer to section 22, aggregate turnover exceeds 10 lakhs in the case of only special category states. Other than special category states, 20 lakhs. Only goods, 40 lakhs in the given respective states, no need to register. Otherwise, you are bound to register. This is a simple and fine answer for your question. Let me see any other doubts. So far, so good. I was giving example of E-invoice. In case of an E-invoice, one invoice is good enough, students. That's all. Next. When I issue a tax invoice, this common question comes. How many digits should be mentioned on a tax invoice? In case of services, in case of a turnover, aggregate turnover exceeding 5 crore, maximum up to 4 digits. In case of a turnover exceeding 5 crore, maximum of 6 digits. HSN or service accounting code has to be mentioned. I repeat, on a tax invoice, when I issue a particular tax invoice, description of goods or description of services. What will I do? I refer to 1 of 2017 for goods, 11 of 2017 for services. Read with service accounting code given for your services, customs tariff act under customs law for goods. I refer to either of these two sources for identifying my classification. This is a number of digits of HSN / SAC, which I have to mention on my tax invoice. Now, there's a new concept called revised tax invoice. Section 31, subsection 3 talks about this revised tax invoice. So where do we use this revised tax invoice and how do we use this concept called revised tax invoice? I'll give an example. Let me just insert one slide. Okay. In case of a revised tax invoice, I'll give an example this way. Say, let's take example of Geeta. Say Geeta, she has cleared her CA. She started her practice on 1st April 2024. And she gave, say she got an audit appointment and she completed one internal audit. April 24 to 30th April 24, she has completed one internal audit and she has to give a bill for, say, 12 lakhs. Say she is from Tripura. She has only registration and her office is from Tripura. Internal audit fee, she has to issue for 12 lakhs. Please remember, as per section 22, exceeding 10 lakhs, she has to register under GST law. Now, what happens? 30th April 2024, she gives her audit report. She got engagement letter on 1st April 2024. Provision of service is given on 30th April 2024. Now, once the audit report is issued, now she has to issue a tax invoice. On 30th April 2024, no registration is there for Geeta. So what she will do? She has to apply for registration as per section 25 under section 25. Within 30 days, you have to apply for registration. So assuming 2nd May 2024, she has applied for registration. I'll put the date chart here for ease of identification. First April 2024, she got an engagement letter for conducting audit. 30th April 2024, she completed and issued her final internal audit report. Along with 2nd May 2024, she applied for registration. On, say, 15th May 2024, registration is approved. With effect from 1st April 2024. Now, these are the dates relevant for your revised tax returns. On 30th April 2024, when the audit is completed, as per Rule 47, 30 days is a grace period given for issuing an invoice. On 2nd May 2024, assuming she has to give a bill. Client says, ma'am, please give a bill. We have to accrue for your services. So what happens here is, Geeta will issue an invoice without GST on 2nd May 2024. On 15th May 2024, she can issue a revised tax invoice with GST. Now, provisions say that under section 31, when we talk about a tax invoice, applying for registration within due date, after due date. In this example, 15th May, I said, when is she liable for registration? 30th April, when she completed her services, she is due for registration. She applied on 15th May 2024. Now, assuming for a moment, instead of 15th May, she has applied for registration on, say, 18th June 2024. Now, this is beyond 30 days. So, the GST law says that the concept of revised tax invoice under section 31 can only be issued if you have applied for registration within the due date. So if you have sought for registration within due date, then you can issue a revised tax invoice. If you are not issued within the due date, no concept of revised tax invoice. Examination 1 mark MCQ, where we will test you. Examine the provisions of revised tax invoice for issuing a tax. They'll give you the dates. They'll give you when the registration was applied, whether a revised tax invoice can be issued. So here, under section 31, application for registration can be filed within 30 days of triggering point or can be filed after 30 days of triggering point. So what does section 31 say? Application filed within 30 days, effective date of registration till date of issuance of certificate of registration. So from the day you apply for registration till the day you get sanction for your issuance of certificate, what you can do for this particular period, You can issue within 1 month from the date of issuance of registration. You can issue something called revised tax invoice. Right? Effective date of registration till date of issuance of registration certificate. In our previous example, she has applied for registration on 2nd May 2024. Her application is approved on 15 May 2024. The gap between this is referred in section 31. Effective date of registration. Sorry. Here, 2nd May is applied, but her application is approved from 1st April 24. Her application is approved from 1st April 24. So the provision says that from 1st April 2024 till 15 May 2024, any invoice without GST can be issued as a revised tax invoice as per the provisions of section 31. Effective date of registration till issuance of certificate of registration, whatever gap is there. For that gap, I can issue a revised tax invoice. What is the time limit? From the day you get your RC, from the date you get your RC, T plus 30. From that day, within 30 days, you have to issue something called revised tax invoice. You have to issue something called revised tax invoice. Only when you file your application within the due date. Good question. Rahim is asking this question. So when the registration certificate is approved, will they give approval from 30th April or will they give approval from 1st April? When Geeta has filed an application, she will say, I am liable for registration from 1st April. Though on 15th May, officer is giving a registration. With effect from 1st April 2024, the registration will be valid. What I'll do, next class, I'll take one RC copy just to show you a sample. Though I filed for my application on 2nd May, Rahim, since Geeta says she is liable from 1st April 24, from that date till the date of issuing RC, all this date will be valid. Because Geeta has applied for registration within 30 days of her liability to apply. Namrata says retrospectively applied. Not retrospectively, Namrata. From the day she is liable for registration, within 30 days, she has filed her application. Assuming here, 30th April, she has to issue. Okay. 30th April is a point in time. She has to apply for, she's due for application. Okay. I think this 30 days is slightly bouncing back. I'll give the example this way. Let me just insert one more screen. Liable from date of application, approval date, validity. Validity. Say scenario 1. Say Geeta is liable from 1st April 2024. She has applied for application on 30th April 24. Approval is received on 15th May 2024. I'll slightly correct my previous example with this line. Students, again, please focus on this line for validity of this reverse tax invoice concept. Gap between my liable date and date of application is within 30 days. So from where I draw this provision under section 25. Section 25 deals with registration. I applied within 30 days. So my validity will be from 1st April 2024. My validity will be from 1st April 2024. Scenario number 2. Liable from 1st April 2024 Application has been filed on 15th May 2024. Authorized approval from the officer, proper officer, has approved the application on, say, 30th May 2024. Now, if you look at that date, in the application, Geeta will mention she is liable from 1st April, but she has filed the application on 15th May 2024. This gap is greater than 30 days. Under section 25, Geeta has clearly mentioned that she is liable from 1st April, but she filed application on 15th May 2024. Then the RC, my registration certificate, be valid from 15th May 2024. If I file my application after 30 days, from the day you file your application, that will be relevant for giving your validity. Now, based on this, when I read section 31, for scenario 1, for the period from 1st April 2024 to 15th May 2024, unless I have a registration certificate, I cannot collect tax from my customer. So what I will do? I issue a revised tax invoice within 30 days from 15th May 2024. This is what we need to understand. Examination, 1 mark MCQ to evaluate the given dates or to say true or false based on the given facts. For scenario 2, tax invoice can be issued only on or after 30th May, only after 15th May 2024. Because my approval is given on 30th, mentioning that I am eligible for 15th May. So only after 15th May I can issue a tax invoice. But in case of scenario 1, right from 1st April 24 to 15th May, I can issue something called revised tax invoice. This is what we need to. Let me see any doubts so far. Okay. Okay. First, I'll read Namrata's question. Sir, 12 lakhs in our example will be included GST or excluding GST? Since I have issued an invoice for 12 lakhs, Namrata, it will be excluding GST. Section 32, when I read, I don't have authority to collect GST without registry. So I'll give a basic invoice for tax invoice, 12 lakhs. After I get a GST, I will collect that 18% GST. Now, interesting question from Ramakrishna. Ramakrishnan says, if the approving authority takes 4 months to approve and gives a registration certificate only after 4 months period, what to do in that scenario? Practically, it will not happen, Ramakrishna, but there are a few instances where officers took more than 1.5 months to 2 months for various reasons, known to the good old officer. Because you have not met the officer, you didn't give the agreement copy, hard copy, you have not visited the officer with the documents, various peculiar reasons. Now, as per law, please keep in mind, Ramakrishna, section 25 clearly says, there is a time limit of 15 working days by which the application has to be approved. If the officer, once I file an application, within 15 days, a show cause notice has to be issued by the proper officer. If the officer does not issue a show cause notice, it is deemed that on the 16th working day, my application will be approved. I think it is not 15, 30 days. Within 30 days, application will be approved. So if officer issues a show cause notice, I have a time limit of 7 days to respond to the show cause notice. If I respond to the show cause notice within 7 days, then if officer does not take any action, it is deemed that on the 8th working day, my application is approved. Ramakrishna, read section 25, read with rule 18, where this time limit of 15 days, 7 days is clearly mentioned. Practical reasons, if the officer doesn't take any action, Rama, by default, my application is approved. Namrata is asking this question. We need to apply within 30 days from liable to register. Yes, Namrata. As per section 25, law clearly says that only in case of a casual taxable person, NRTP, 5 days prior to commencement, apply for registration. In case of a regular registration, 30 days from the day you are liable to register, please apply for registration. It is filed after 30 days from the date become liable, then validity from the date of approval. Not from the date of approval, from the day you file the application, from that day they will apply Namrata. Because you have sought for, in this example, in scenario 2, since your application came on 15th May, they will give the sanction from 15th May, not from 30th May. This is just a administrative reason they took 15 days. But the day you file your application, that will be relevant, Namrata. Hope this is clear, ma? Rama, hope I have clarified your doubt, ma? Now, issuance of a tax invoice, if the value is less than rupees 200, instead of giving every transaction tax invoice, I can issue something called consolidated tax invoice. Like example, Namrata was saying, where there are numerous transactions. Like example, movie theater. When we go for multiplex theater on any blockbuster movie, there will be rush of people. So I need not give a tax invoice for every customer. I can give a consolidated tax invoice. Multiplex theater is one example for this point. Second example, I gave Amaron batteries or Excite batteries, where AMC per month is 100 rupees. Because the value is less than 100, I can issue a consolidated tax invoice on a daily basis. Issuance of a bill of supply. A registered person supplying exempted goods or paying tax under section 10, that is composition scheme, will issue something called bill of supply. Example, agriculture supply or composition scheme, or your works contract to government sector. Wherever there is a benefit of notification 12 of 2017 or 2 of 2017, I issue something called bill of supply instead of tax invoice. Examination, 1 mark MCQ. They'll give you a transaction. They'll say, in this case, a tax invoice will be issued, a bill of supply will be issued, tax invoice come bill of supply will be issued, none of the above, or delivery challan. So please choose your answer carefully. In case of taxable goods, tax invoice. In case of exempted goods or exempted services, bill of supply. In case of composition scheme, your bill of supply. In case of like both taxable and exempted, then tax invoice come bill of supply. Example, Big Basket. When Big Basket gives their products, exempted goods along with the taxable goods are supplied. Then they issue something called tax invoice come bill of supply. In case of a bill of supply, like a tax invoice, rule 36, I have to mention description, I have to mention the invoice consecutive serial number, description of goods and services along with HSN, date of issue, value of supply, and digital signature or manual signature. Receipt voucher. Now, Rule 50 talks about something called receipt voucher. What is a receipt voucher? Receipt voucher under section 13, which deals with time of supply for advances. Generally, whenever I receive advance, I issue something called receipt voucher. Now, receipt voucher is for receipt of payment in advance, where supply of goods or services have to take place. Then I issue something called receipt voucher. This receipt voucher I disclose in table number 12 of GSTR1 for payment of taxes. And I disclose in GSTR 3B for payment of taxes. Whenever subsequently I issue a tax invoice, I make an adjustment in table 12 for the receipt. Also, I'll show respective this tax invoice in respect to B2B or B2C column. This is what we do with respect to a tax invoice. I'll just give a little more clarity in this regard. When you file your GST returns, most of the time you may not get a clarity how to deal with this particular advances. Say 30th April 2023, there is a receipt of rupees 1,18,000 from B2B customer. So on 30 for the month of April 23, in GSTR1, I'll show details of advances. In GSTR 3B, I pay tax. Assuming in June 23, the tax invoice is issued. June 23, the tax invoice is issued when after provision of service. So what I will do in the month of June, GSTR1, I'll disclose the tax invoice as B2B. And in table 12, I'll show as a adjustment of advances. In GSTR 3B, no disclosure. Reason? In month of April, 1,18,000, 1 lakh is my taxable value, 18,000 is my tax, and all put together, 1,18,000 is received. In June, tax invoice is issued for 1,18,000. Because already the tax was paid in B2B, only adjustment of advances and disclosure of tax invoice in B2B column, I'll show. Impact of this, nil impact in my GSTR1. I reduce advances, I increase B2B. Both get adjusted and there is zero impact. Now, this is what I do in case of advances. Please keep in mind, students, as per Rule 50, every receipt voucher I need to issue, every advance I have to issue receipt voucher. There is something called table number 13 in GSTR1 where we show details of receipt vouchers issued during every month. Now question comes here. Sir, I receive advance for service. I don't know what is the rate or I don't know what is the nature. Is it intrastate supply or is it intrastate supply or interstate supply? I'll give a classic example. Let's take example of Kirloskar. Where my I have three divisions. One is manufacturing, not Kirloskar. Let's take example of Maruti. Maruti has got manufacturing division, trading division, service division. Assuming there is a receipt of money in service division. So there is a bank account called State Bank of India, maintained at head office, which is in Mumbai. So, which is in Maharashtra. I receive money of, say, 2 lakh. When I receive money of 2 lakh, I don't know from which customer. Is it pertaining to Patna? Is it pertaining to Tamil Nadu? Is it pertaining to Uttar Pradesh? I don't know. I receive 2 lakhs. I also doesn't know what is the rate of tax. Then this particular rule says, if the rate of tax is not known, tax shall be paid at the rate of 18%. If the nature of supply is not known, then please pay that as an interstate supply. I repeat, pay 18% and consider that as an interstate supply. 1 mark MCQ question. Now, please keep in mind, students, all these slides, what I am discussing with you, are relevant from your MCQ point of view. Examination, don't let even 1 mark to be lost in MCQs. Now, question comes. So, what if I'll give the same example in this way? Say, let me insert one slide. Sir, month 1, I received 2 lakhs. I received advance. I don't know the rate. I don't know the nature. So as per your guidance, I paid 18%. I paid this as IGST. Month 3, I got a clarity that this is from a customer where the rate of tax happens to be nil rated or 0 or exempt. Say this is scenario 1. What will I do? Assuming on 2 lakhs, 36,000 is already paid. What will I do? The answer is there's one notification, there's one circular, 26 of 2017. This circular has been referred in many High Court cases 2017, 2018, 2019, 2020. There's one Gujarat High Court judgment, AAP and Co. Chartered Accountants case. Very renowned case law with respect to questioning and challenging whether GSTR 3B is a written under Section 39. I'm bringing to your knowledge this case citation. Who are interested in subject can read that particular citation. Now coming back to this example, sir, month 3, I got to know that rate of tax is nil or exempt. What will I do? Then the provision says that, the circular says that, adjust in month 3 liability for rupees 36,000. So what if I cannot adjust? Claim a refund. Claim a refund. This is what they say. Say in scenario 2, month 3, I got to know that this is from a customer where it should have been intrastate supply. Intrastate supply, that is SGST and CGST ought to be paid. But what happened in month 1 in GSTR 3B? In GSTR 3B, I have paid IGST. So what I will do in month 3 in GSTR 3B, I'll pay SGST and CGST and reduce IGST to rupees 36,000. So what if I don't have output tax in IGST? Then in any of the subsequent months, do the adjustment of IGST. Do the adjustment of IGST. Sir, I don't have any IGST billing going forward. Then claim a refund. This is what my GST provisions talk about a refund voucher. Let me see any doubts so far. IGST is interstate supply in Amrita and tax rate is 18%. In case of Namrata says every even for 100 rupees advance also. Okay. If you receive 100 rupees advance, if it is in excess of the consideration, Namrata, up to 1,000 rupees, you have a choice to decide when to issue a tax invoice. Refer section 13, refer section 12, Namrata. Very good question. So what happens if I receive 100 rupees as advance? Now, if it is in relation to a supply up to a sum of rupees 1,000, you can decide when to issue a tax invoice. Provision for that, section 12, section 13. Namrat is asking this question. Sir, do we need to mention this case in examination? No need to mention, ma. Please refer when you have an interest to read a particular case law. Examinations, you don't know the case citations as per the provisions of GST law is good enough. Don't quote section, don't quote circular, don't quote notification number. Refund voucher. Now, sir, I received advance. You asked me to pay tax. I'm a very honest taxpayer. I pay tax. But my marketing person came and said, look, a customer is asking money back. I have to give back. What will I do? Now, I'll issue something called refund voucher under Rule 51, where I already issued a receipt voucher, where I have not made a supply nor I have issued a tax invoice to the customer. In that case, I issue something called refund voucher to my customer. So, this is a case where I have paid tax on the basis of receipt of a receipt voucher. Once I paid the tax, my internal communication comes to me. Look, you paid tax in hurry. You're a Harish Chandra. I said not to pay tax, but you were in a very big complaint and you paid your tax. Now customer is asking that money back. So where do we get this kind of scenario? Example, classic case of your advance for hotel booking. Advance for plots or construction, plots purchase before OC. Like example, say Rahim goes along with his family and purchase, like they are interested to buy a particular villa. Cost of villa is 1 crore. The builder says, sir, you pay 1 lakh today and block your villa. You can give you installments and you can pay down the line. In a hurry, they paid 1 lakh and 18% GST, 1 lakh 18,000. After a week, Rahim comes to know that this particular villa has got approval, which is not as per the local state authorities. He goes back to claim a refund. That point in time, because the service was not rendered to Rahim, the builder or the promoter issues something called refund voucher. Self-tax invoice, read with Rule 46, read with Rule 36. Many of chartered accountants doesn't give importance to this self-tax invoice. As per GST law, under Rule 36, if you want to claim input tax credit, the document required is called as self-tax invoice. When supplier is not registered on the date of supply, the person who is a recipient is liable under 9.3 or 9.4. 9.3, 9.4 is a notified list of goods or services. In that case, the recipient who is authorized or was notified to pay tax under reverse charge shall issue something called a self-tax invoice in relation to goods or services. Example, GTA. On the date of providing services, GTA, who is a service provider, is not registered under GST. Recipient happens to be a factory. As per Section 9, subsection 3, the factory is notified to pay tax under reverse charge. In that case, under Rule 9.3, Section 9.3, read with Rule 46, the document for claiming input tax credit. The document for claiming input tax credit under Rule 36 is called self-tax invoice. A registered person may issue a consolidated invoice at the end of the month in case of unregistered purchases under 9.4, where aggregate value of supplies per day is less than 5,000 rupees. Generally, for every transaction, I have to issue something called self-tax invoice. I don't know how many of you have done internal audit of a factory manufacturing unit where transportation is a cost. Or take another example, director sitting fee. Where tax is paid under RCM, you wouldn't have seen something called self-tax invoice. Please recommend wherever input tax is claimed on RCM basis, a document called self-tax invoice is compulsory under GST law. In case of continuous supply of goods, we have already read section 12, where time of supply for continuous supply of goods, wherever statement of accounts or wherever successive payments are involved, that point in time, tax invoice is required. In case of a continuous supply of services, which are given on continuous basis, where payments are ascertainable or where the due date for payment is mentioned or where payment is received on or before that particular date, I have to issue a tax invoice. In case my contract is linked to a particular completion of an event, on or before completion of that particular event, we have to issue something called tax invoice for continuous supply of services. Suppose there is a closure of a service under a contract. There, the section 31 says, where supply of services stop under a contract before the completion of the supply, invoice has to be issued at the time when the supply ceases to extent the supply is already made. Where the supply is already made, to that particular extent, please issue a tax invoice. This is law. Practically, you will come across a situation where you're, say, I'll give an example of let's take example of a canteen, food supply. As per the contractor has to make food supply for canteen. So 1st April 23, the contract started. On 5th April 23, they decided that food is not good, stop the supply. As per section 31, the agreement the provision says, since you made a supply from 1st April 23 till 5th May 23, 5th April 23, for these 5 days, you raise a tax invoice. This is what section 31 talks about. Next, goods sent on approval basis. Goods sent or taken on approval basis. Let me take few questions. Ramakrishna is asking this question. In case the tables are auto-populated in the portal, how can we show adjustment for CGST, SGST with IGST, etc. as shown in your example? Okay. Rama, I have paid IGST, but I have to pay CGST, SGST. Okay. Or I have paid IGST where I'm not to pay IGST. So what I will do here, in the month 1, I paid say 18,000 IGST. Month 3, when I travel, I realize that it is exempted supply. I ought not to be paid IGST. Now, month 3, when I issue a tax invoice, what will happen? I issue a tax invoice with nil rate of tax. I make an adjustment in GSTR1, reducing my IGST. Negative IGST came in B2B column, 0 taxes there. Please understand this example carefully, Rama. Now, benefit of other students. I'll explain this way. A practical question. This is a practical question. So month 1, IGST paid for rupees 18,000. Month 3, there was a realization that it is a nil rated supply. So what I will do? In month 3, I'll report B2B as exempt. In table 12, I'll make a adjustment of advance. So by making adjustment of advance, negative 18,000 will be auto-populated. Exempt, it will be shown 0. Adjustment of these two, there is a result of 18,000 negative. When I travel to GSTR 3B, for the month of GSTR 3B of month 3, IGST, CGST, SGST. Unfortunately, this 18,000 will not be auto-populated. Please keep in mind, negative balances will not be auto-populated. So month 3, assuming that other than this transaction, there's one more B2B supply of 50K. This 18,000 and 50,000 will get adjusted and only 32,000 will be auto-populated in my IGST. This is what generally happens when there is one taxable supply with adjustment. 50K and 18K will be adjusted and 32K comes into picture. So this is the case, Rama, where I'm saying there is an adjustment of my tables where suitable amount comes and disclosed. Now I'm saying that instead of 32,000, this is scenario where I disclosed as 18,000, but it turned out to be nil rated transaction. This is how internal adjustments happens. Hope this is clear, ma? Now, section 31. Goods sent on sale or written basis. When goods are sent on approval basis or for sale or written. Approval for sale or if not approved, it is meant for written. When the goods are sent for sale or written, subject to approval. Like example, jewelry. When I sell jewelry to my customer, assuming my customer is a HNI customer, where he wanted some ornaments worth 1 crore. I'll give the ornaments worth 1 crore to my customer on a delivery challan. So when I send this material, it is meant for sale subject to approval. To the extent the approval is received, I issue a tax invoice. To the extent it is not approved, I have to receive back within a period of 6 months. So the provisions say, whenever approval is received, issue a tax invoice. And if the approval is not received, then the goods have to be returned back within a period of 6 months from the date of removal, whichever is earlier. So what happens if the return doesn't happen within 6 months? Then it is deemed that supply took place on the date of removal. So assuming that 1st April 23, I have sent the goods for sale or approval basis. 6 months ends on, say 30th September 23. This is my gap of 6 months. So if customer does not approve on or before 30th September, it is deemed that supply happened on 1st April 23. This is what we need to understand in relation to sale or approval basis. Next aspect, delivery challan. Delivery challan I use where transportation of goods are made without issuing a tax invoice. Where one is in case of supply of liquid gas. In case of liquid gas, from the factory when the gas is loaded and removed, it goes from the factory to a weighment bridge. From the weighment bridge, it reaches to the customer. Or in transit, probably assuming there is a travel time of 5 days. There could be a gain of mass, there could be a loss of mass. So in case of a liquid gas, where the quantity at the time of removal is not known, in that case, I can issue a delivery challan. Or when transportation of goods are meant for job work, when I send goods for job work, instead of a tax invoice, I issue a delivery challan. Transport of goods other than supply, like example, stock transfer, giving gifts to a customer, or any other reason where goods are meant for transportation, which is other than supply, I issue a delivery challan. Such other supplies as may be notified by board. As on today, there is nothing notified. In these cases, I issue something called a delivery challan. Now, there's one question asked by Namrata in continuation to what Rama has asked. Namrata is asking, so then interest late fee will be charged for 6 months. In case of a sale on approval basis, yes, Namrata. Deeming fiction, the day the goods are deemed to be supplied, interest and late fee, interest will be, not late fee, interest will be charged. Exceptional cases of delivery challan, where goods are being transported for the purpose of supply, but the tax invoice could not be issued at the time of removal. Then I can issue a delivery challan. Like example, cases of that is sending the goods on completely knocked down or semi knocked down cases. Let's take example of this windmill case. Windmill supply. Let's take example of Suzlon. Suzlon is a company which manufactures windmill. If you see this particular windmill, this is like a fan with three turbines attached to this. Looks like a simple fan, but this unit needs to be sent in two lorries. This individual one lorry each, and this one lorry each. So in totality, for this fan, the three lorries are required. One lorry into three trucks. Three trucks are required. For this main unit, one truck and two trucks. 2 plus 3, 5 plus 1. Total 6 trucks are required for supplying this one unit to a customer. Now, for these 6 trucks, I have only one tax invoice. Provisions of GST law says, look, when we are sending material completely knocked down, semi knocked down in batches or lots, prepare one invoice before dispatch. Then, for every truck or a consignment, prepare a delivery challan. And along with the delivery challan, for every consignment, please give a certified copy of invoice along with the delivery challan. The original copy has to come in along with the last consignment. So when you are sending 6 trucks for delivery of this windmill, what we will do? Every truck will have a select truck 1, truck 2, truck 3, truck 4, truck 5, truck 6. I'll have delivery challan plus certified copy of tax invoice. Delivery challan plus certified 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 tax invoice. Last consignment, delivery challan plus original tax invoice. This is how the trucks travel, where my tax invoice along with the delivery challan will be accompanied in a semi-knock condition case. This is my rule 55. Rule 54 is similar to rule 32, where we dealt with valuation. There are 6 category of valuation provisions. Similarly, rule 54 has got 3 to 4 aspects and documents issued. First of them is input service distributor. The concept of ISD. The concept of ISD. Reference to 51st GST Council. 51st GST Council meeting. Getting a registration under ISD and issuing a tax invoice or a credit note under ISD is mandated for common services. For common services. I'll give you the background of this ISD. Let's take example of say Mahindra and Mahindra. Mahindra and Mahindra, they have for a moment registration in 8 states altogether. State 1, so on, till state 8. Their head office is in Maharashtra. Say Maharashtra is the head office. Now, they have common services like 1, advertisement. 2, audit service. 3, banking and insurance. 4, your license, software license, etc. Now, these are the services where the head office receives the bill. Head office receives the bill. Because this list of services are common in nature for business point of view, the provisions of section 20, which deals with your input service distributor, the same. Get yourself registered as a ISD registration at head office at Maharashtra. Register yourself as ISD. What you will do? Registering yourself as ISD, you will distribute your input tax credit. You will distribute your input tax credit to the respective individual states. So on till state 8. On the basis of turnover, on the basis of aggregate turnover. So there is a formula which is specified under section 20. On the basis of this particular formula, my ISD is distributed to the respective states. As for section 54, ISD invoice, ISD debit note, ISD credit note is recommended. I mentioned the name, address, and GST of the recipient, date of issue, consecutive serial number, and the amount of input tax credit being distributed to the respective units I mentioned under rule number 54. Please keep in mind, students, mechanism of section 20, that is computation of aggregate turnover, issuance of a ISD invoice. ISD invoice. This is something not widely known in the industry. Please wait and watch once you get qualified and get into the industry. Issuance of a insurance of banking company. For services rendered by them, they issue something called a consolidated tax invoice. They don't issue invoice for every transaction. At the end of respective month, they issue one invoice for all the services rendered in that particular month. In case of a GTA issues a tax invoice mentioning gross weight, details of consignment, details of consignor and consignee, registration number of the vehicle, and the person who is liable to pay tax on reverse charge. Details of goods transported, origin, destination, GSTN of the person liable to pay tax under reverse charge. Passenger transport service like your bus, interstate transportation, etc. Tax invoice will be issued by whatever name code. There is no compulsory that they issue something called tax invoice, which should not, whether or not serially numbered, whether or not containing address of the recipient, but some details specified under Rule 46. Cinematographic films, they need not issue tax invoice. Any document, as long as details under Rule 46 are mentioned, it can be called as a tax invoice. Then, next aspect, E-invoice under GST. Let me see any doubts so far. Namrata is asking this question. Certified tax invoice will be given for each part separately. Namrata, in case of this windmill example, I have one invoice. I print 5 extra invoices, or I take a Xerox copy of that invoice. The photocopy. Original 1 invoice, 5 photocopy. All 5 photocopy, I'll say certified true copy, certified true copy, certified true copy. That certified true copy I'll attach with the delivery challan. The last truck, 6th truck, original invoice and a delivery challan will travel together, Namrata. Common services is not clear. I'll give a clarity, Namrata. Let me come to a new slide. Common services. I'll give example of, let's take example of Mahindra and Mahindra. They are registered in, say, like registration status, if you see, 1 in Maharashtra, where we call that as a head office, 2 in Tamil Nadu, 3 in Delhi, 4 in Kerala, 5 in Telangana, 6 in Gujarat. So these are the states they have registered. They have received, say, month 1, month 2, month 3. If you look so on, so forth, till month 12, every month there will be some purchases like advertisement, audit, which I call this is statutory audit, say banking service, in another month insurance, in another month say there is a software purchased called some license for some CAD/CAM design service, software imported. Now, on these particular services, there is a GST paid. This GST paid is common for all these states. If you recollect your topic in costing, there is something called unit. No, there's one topic. Just give me a minute to recollect. There's a topic called departmental costing. Departmental costing, where when we have common expenses, these common expenses, direct or indirect expenses, I allocate to the respective department on a factor, on a particular factor. This particular factor could be gross profit, could be turnover, could be number of employees, could be on the basis of depreciation units, based on consumption, based on land space. These are various factors where I allocate common expenses to the various departments. Similarly, under GST law, I have common expenses. I call all these as common expenses. These expenses are common at entity level. Like example, advertisement. Now, when assuming there is something called Founders Day, on the day of celebration, they spend 20 lakh rupees for advertisement. On 20 lakh, assuming 18% GST. Now, I have paid 3.6 lakhs for the entire company as a whole. Similarly, statutory audit. Assuming the statutory auditor charges 50 lakhs as audit fee, on which 9 lakhs happens to be GST. When 9 lakhs is paid, this is for the entire company. So what does this GST law say under section 20? Something like your departmental accounting. Identify something called a factor which is on the basis of annual turnover. They ask us to find out my total turnover into individual unit. Sorry. They say your total input tax credit for that particular month into branch, or I'll say state level turnover divided by annual turnover of company. If you do this, you'll get the input tax credit allocated to respective states. This transfer is based on ISD tax invoice. ISD tax invoice. Under rule 54, a ISD tax invoice is issued on the basis of a formula which is specified under section 20. This is applicable for common services. Hope this explanation is clear, Namrata. Rahim is asking this question. So for receipt voucher, in case of refund, is only B2B applicable? Not guaranteed, ma. Even a B2C also is possible. Like example, say in your own individual case, Rahim. You have gone as an individual customer, paid 1,18,000. When you claim a refund, they issue a refund voucher and issue 18,000 back as a refund. Even B2C case, it is possible, Rahim. Ramakrishna is asking this question. If Mahindra is having separate legal entities with say separate PAN, can they distribute GST? Now that will be a direct cross charge. It is not a ISD invoice, rather a regular tax invoice has to be charged. From one GSTN to another GSTN Rama, we have to charge a GST separately. It cannot be ISD, it would be a regular tax invoice. Yes, Namrata. Section 20 says you have to go based on turnover. E-invoice under GST, as on today, it is a settled law. E-invoice, the origination started with Rule 48. I'll just come to one slide for the dates. October 2020 is a point in time where E-invoice has been started. Now, GST Council, on the basis of recommendation of various states, they have said that to control fraud, to control fake invoicing, to get statistics of the data of transactions, they brought in this concept of E-invoice. How does the E-invoice looks? I just gave one example here. This is how E-invoice looks. This is nothing. This is a QR code. And this is IRN, invoice reporting number. For a tax invoice, this is my invoice number. This is my invoice number. GST law says that, please prepare a tax invoice. Log into GST portal and report this tax invoice with some data. What is the data? Name of the customer, HSN code, value of the invoice, tax rate, classification. With basis of this information, like example B2B category, tax invoice, invoice date, invoice reference with value. When I report all this on common portal, when I report all this information on common portal, my common portal returns back something called QR code, returns back something called IRN, invoice reference number. They call this is a unique number. This is a 56-digit check key. My IRN is a length of 56 digits. This is generated on the basis of a data which is given to GST portal. So as on today, GST law says that generate an e-invoice which contains my QR code, which contains this IRN number. This is called e-invoice. Rule 48 is a Rule 48 sub Rule 4 is the origin for this e-invoice under GST law. As on today, any registered person having a turnover, aggregate turnover exceeding 5 crore, they have to mandatorily, compulsorily issue tax invoice. Issue tax invoice, which is called e-invoice under GST law. Tax invoice without QR code, without IRN is a regular tax invoice. Tax invoice plus QR code and IRN is called as an e-invoice. I prepare a simple tax invoice, that's called tax invoice. To this tax invoice, when I report to GST portal, I get back QR code, I get back IRN. Combination of these two is called as an e-invoice. So what happens? I'm a registered person. My aggregate turnover is more than 5 crores. I have not issued a e-invoice. Then my Rule 48 says that every invoice issued by a person to whom sub Rule 4 applies in any manner other than the manner specified in this rule shall not be treated as an invoice. Remember Rule 36? As per Rule 36, there is a requirement of a tax invoice as per respective rules of Chapter 6. Chapter 6 of GST rules. One of them is Rule 48. If the tax invoice is not as per Sub-Rule 4, that is, E-invoice is not issued, then no input tax credit to the customer. Also, the seller, whoever is giving the goods and services, he will be penalized under Section 125 for a penalty of 25,000. Customer will not get the input tax credit. The seller is penalized for non-compliance. Exclusion from this e-invoice issuance, SEZ unit need not issue e-invoice. SEZ developer has to issue e-invoice. 1 month MCQ question. Is SEZ developer required to issue e-invoice? Yes. Is SEZ unit mandatory to issue e-invoice? No. These are relaxation from issuing e-invoice under GST law. First is SEZ unit. Second, insurance or banking company. Why they have insurance or banking company outside the purview of e-invoice? Every bank, every financial institution generates lack of transactions. If this data goes and sits on a GST portal, imagine the kind of data which gets generated. The volume of transactions cannot be controlled. For that reason, they kept insurance or banking company or a financial company outside the purview. Third, goods transport agency. Fourth, passenger transport service, like your IRCTC, classic example. Fifth, services by way of admission to cinematograph films. Then people who have a turnover less than the specified limit, any of the preceding year from 17-18, less than 5 crore, no need to issue tax invoice. That is e-invoice. Please keep in mind, as on today, any registered person whose aggregate turnover exceeds 5 crore, only for supply of taxable goods or services, e-invoice is compulsory. Let's take an example. Say, Mr. X registered person having an aggregate turnover 12 crore supplies exempted goods, which is a B2B transaction. Is e-invoice under Rule 48(4) compulsory? Answer would be no. I repeat, Mr. X, who is a registered person, whose aggregate turnover is 12 crore, who supplies exempted goods, which is a B2B transaction, compliance under Rule 48(4) is not required. Why? Only in case of taxable goods or taxable services, e-invoice has to be issued. List of transactions, B2B, SEZ, exports, deemed exports. So what is missing here? B2C. So in case of a B2C transaction, e-invoice is not required. B2B, SEZ, exports, deemed exports. All these cases, e-invoice is compulsory. What is that I have to mention? Invoice number, date, type of invoice, debit note or credit note or invoice. Buyer details, GST number and place of supply, address, product details, export details, shipping bill details, and then e-way bill details. These are required for e-invoice. This we have discussed. This I'll skip for positive time. Section 32. I am prohibited or I am not authorized to collect tax if I am not a registered person. Namrata, you asked this question a while ago. If I am not a registered person, in the example 12 lakhs, what we have asked, a person who is not a registered person shall not collect in respect of any supply of goods or services, any amount by way of tax. So rule section 32 says that unless your registration is not approved, you cannot collect GST. This is a point which you need to keep in mind. Namrata is asking this question. How is this QR code useful? This is useful for the GST checkpost officer just to scan to say whether this is a genuine QR code or a fictitious QR code. Otherwise, in reality, it is of no use. As on today, I honestly tell you, QR code is just as a legal compliance. Otherwise, we don't use that. No registered person shall collect tax except in accordance with the provisions of the law. Section 33. Amount of tax to be indicated in a tax invoice and other documents. They say when you issue a tax invoice, Rule 46 read with Section 33, please indicate on the tax invoice where a supply is made for a consideration. Every person who is liable to pay tax prominently indicate in all those documents what is the assessment, what is the tax invoice, what is the amount of tax which will form part of the price inclusive basis or exclusive basis. Inclusive or exclusive. Please mention the details of tax on that particular tax invoice. Let me see any dots before we continue further. So far, so good. Students, we are at 9.2. Credit note. It takes a decent discussion of 10 to 15 minutes with a good amount of examples. What we'll do, we'll stop our discussion today. We'll continue with our detailed discussion in the next class to understand in a better fashion the debit note, credit note, e-way bill under GST law. With this, we come to the end of today's discussion. Good night, goodbye, and happy and safe Diwali.